What is an appraisal gap? Does having one gives you an advantage over other offers on the same home? In this video, I'll explain what is an appraisal gap, how and when to use it, and how buying a home with an appraisal gap affects your future equity. So let's dive into it right now. Let's start with the basics. When you are financing the purchase of your new home, there are many contingencies that you can use in order not to lose your earnest money. One of them is the appraisal contingency. What this means is that the bank will order an appraisal of the home you are intending to buy. The appraisal is a valuation of the house in order to make sure the price is comparable to the houses that recently sold in that particular area. If the house appraises for less than the sales price, you could back out of the deal, or you could also try to renegotiate the price of the home. Here in South Carolina, the contract clearly states. As you can see, there is a space where you can check whether the contract is or is not contingent on lot or parcel with building and improvements thereon, if any, appraising according to lender's appraisal or other appraisal as agreed by buyer and seller for non-lender finance transactions for the selling price or more. Notice that it says that if the parcel or building and improvements appraises for less than the selling price, the buyer will have 3 business days after notification of the results of the appraisal to proceed with the consummation of the sale without regard of the appraised value, or the person can simply terminate the contract. So what does this mean? Let's say that you are trying to buy a home that is listed for $400,000 and you decide to include an appraisal contingency in your offer. If the house appraises for less than $400,000, then you can back out of the deal or try to renegotiate. Let's say the house you are intending to buy appraised for $390,000. In this case, you can go back to the seller and ask to reduce the house by $10,000 as it did not appraise for the listing price. The seller can either accept your proposition or reject it and back out of the contract. You could back out of the contract as well if the seller refuses. Keep in mind that when trying to obtain a loan to buy a house, the lender will only borrow based on the fair market value of the house. So if you are planning to put a 3% down payment on a $390,000 home, to continue with the same example we have been using, your numbers will look like this. The home value is $390,000. Your down payment, which is 3% of $390,000, will be $11,700. And then the loan amount is $378,300, which we get by deducting $11,700 from $390,000. So what is the appraisal gap? The appraisal gap is the difference between the appraised value and the money offered for the home. In the example we are using, the appraisal gap is $10,000. So here is how to use the appraisal gap to your benefit if you can afford it. In your contract, you can stipulate that you will pay up to $10,000, $20,000, or any amount of money your finances allow for the appraisal gap without exceeding the purchase price. So if your appraisal gap is $10,000, this is how your numbers will look like. The appraised value $390,000, down payment 3%, $11,700, loan amount $378,300. So based on these numbers, how much do you need to bring to the table in order to close on this house? Well, your down payment is $11,700, your appraisal gap is $10,000, your closing cost we're going to assume is about 2% of your loan amount, which will be $7,800, which brings us to a total to close of $29,500. Keep in mind that when putting an offer like this, you will have to prove to the seller that you have the financial backing in order to buy the house. That means you need to include a copy of your bank statement showing those funds, or your 401k, or any other investments that you can quickly turn into cash. Is it convenient for you to buy a house with an appraisal gap? The answer to this question really depends on the finances of each individual. Buying a house with an appraisal gap means that you will start the ownership of your home with negative equity. Even though the bank is only going to borrow based on the fair market price of the home, you are still having to pay for that extra money. Basically, you are paying more for the house than what it's worth, and that money is coming from somewhere. If you start the ownership of your home with $10,000 out of pocket, then you will have to wait a bit for your house to appreciate in order to recover that investment. If you would like to know how much your new house will appreciate in the next 5 years, make sure to watch this video where I explain the percentage year over year and how to calculate it. One of the benefits of using an appraisal gap clause is that your offer will stand out when compared with any other offers that may not have one. The seller will be more inclined to accept your offer with an appraisal gap if all the other terms in your contract are competitive. My recommendation is to always talk this over with your real estate agent and with your loan officer to make sure you won't be overextending yourself financially. Think about it. Buying a house not only requires to get a loan and start making payments on it, you also need to budget for moving expenses, maintenance, taxes, insurance, etc. So how you should handle the appraisal gap? Here are a few options. Option number 1, challenge the appraisal. Let's say that the listing agent believes the home is priced right and would like to challenge the appraisal. In this case, the listing agent can provide the comparables he used in order to arrive at the listing or asking price. In some instances, this approach could work and the appraiser could potentially revise the home value. Point number 2, renegotiate with the seller and ask for a price reduction if you did not offer an appraisal gap. Point number 3, when using a conventional loan, you could order a new appraisal. Of course, you will have to clear this with your lender. Point number 4, pay for the appraisal gap if you can afford it and move forward with the loan process. Point number 5, you could ask the seller to split the difference between the appraised value and the listing price. Point number 6, if none of these options work for you and the terms of the contract allow it, you could simply back out of the deal. In cases when the buyer is putting more than 3% down, let's say 10% as a down payment on a home, you could potentially reduce the down payment amount on your loan and use the extra money to pay for the appraisal gap. Now let's look at these options with real numbers. To continue with the same example, let's say you are trying to buy a house of $400,000. So if the appraised value is $400,000 and you offer $400,000, then nothing happens. If the appraised value is $390,000, then you will have to use a $10,000 appraisal gap. If the appraised value is $395,000, you only use $5,000 of the appraisal gap of $10,000 that you offered. If the appraised value is $385,000, you can use $10,000 of your appraisal gap and then renegotiate the remaining $5,000. If the appraised value is $405,000, congratulations, you are coming in with equity. If you are on the market to buy a house and need to choose between buying an existing home, one that is already built and previously owned, or a newly constructed one, make sure to watch this video where I explain what are the incentives when buying a new construction home and some of the new construction homes available in Colombia and surrounding areas. Thank you for watching. Remember to give a thumbs up if you like this video, and I'll see you next week.